Hello, everybody. I'm Kevin. Welcome to yet another Coinsider live stream. Today is a special and different one. I'm here with Brian and Mike from Blockchain Crypto Tax Prep, and they're here to answer all our crypto tax questions as it is tax season in the US. So, yes, this stream will mainly be focused on US crypto taxpayers, but as you may know, a lot of crypto tax laws around the world are similar, so they may be able to help answer general questions for y'all in different countries as well. So they're tax professionals focused on crypto taxes. They have a done for you service, and but this stream is going to be focused on general questions to give you value regardless of if you use their service or not. But without further ado, welcome Brian and Mike. Welcome to the stream.
Thank you very much for having us. Appreciate it.
Yeah, thank you, Kevin. We're happy to be here. Can't wait to talk.
Can you give us some quick context about what y'all do in your company before we dive into the questions?
Sure. So basically, we've tried to create the first scalable do-it-for-you crypto tax service so that we don't want to take care of all of the things that your standard CPA will do. We just want to take care of this crypto tax portion for you at an affordable rate.
For sure. Yeah, and that is something I haven't seen in the market as much. I know there's like so many tax tools, but a lot less services like what you guys offer. But without further ado, let's just dive right into some questions. I have some questions, but folks who are listening live, we have around 40 people right now. I bet more will trickle in. And also, if you are watching this video after the stream, then feel free to write questions as well, or just sign up for their consultation. It's free. But anyhow, my first question is a really general one, and it's just, what is your number one suggestion for us who are currently working on our crypto taxes?
Okay, so the one thing I really want to see everybody do this year Bitcoin just hit all-time highs right now, right? So what's going to happen is you're going to generate these capital gains during this year as crypto goes up and down. And what we want to make sure is that if the bottom were to fall out sometime in the first quarter of next year, I'm not saying that it's going to, we wouldn't want you to have accumulated all these capital gains, all these taxable gains throughout the year without putting some money aside. So my suggestion for everybody would be make sure that you're, kind of doing a tax projection in the middle of the year as you're buying and selling all these cryptos, just to make sure that you have money set aside come tax season.
Thank you. That is a super wise and just great suggestion, because I know y'all who are watching this are 2023. Most likely y'all are in profit and are looking at what you owe when filing your taxes this year. So what Brian just said is super important, as this year is almost a full year of bull market if things go as we expect, which means that's going to be even more important to do during the middle of the year and just be on top of that. So thank you for that. We have some good questions coming in, but let me save those for a bit. Keep your questions flowing in. We are going to talk about the relevant ones. Folks, only crypto tax related questions for this stream, okay? Nothing like, no analysis for other stuff. But my second question is also a general one, and for us in the US, what can the IRS see just in general?
Good. So that's I see that one jumping on here. Mike, you want to talk about it?
Yeah, so we've actually had conversations with some of the IRS core team in regards to digital assets and just kind of what they're looking for and what they're seeing. We do know that they have other contractors that they use tools for blockchain tracing, which can kind of identify your public wallets that are connected to centralized exchanges, tracking the flow of funds going back and forth. So even if you have a DeFi wallet that you think only you can see the ins and outs going through it, we do know that, hey, it's a public ledger, right? All these transactions are reported on whatever chain it's on, and the IRS does have tools to track that. Another thing we're seeing is we're getting a lot of audit notices for people who have sold cryptocurrency, specifically, say on Robinhood or somewhere, one of the larger exchanges, but they transferred it from a decentralized wallet, so they're not showing cost basis, right? Because they don't know where it's coming from. So this kind of goes along with, what's a good suggestion for this year is get all your records, right? Get everything ready so that you can use a tool, use our service, something like that, and put everything together to send to the IRS before you start getting IRS notices for not fully reporting everything you've done.
Yeah, that makes sense. Just something off the top of my head, is the IRS notice mainly for people with like just incomplete, like they look at what they send in as incomplete, like you said?
So that's an easy trigger, right? Where it's incomplete. They're going to say, hey, you sold Bitcoin on Robinhood, but you didn't report it, right? $3,000 worth, right? And they're going to say, well, you owe us tax on this, or you have to respond to us and send in the backup of, why you don't owe tax. And then that's when we would, create the 8949 and the gains and losses associated with that to provide them with the correct data. We do know that in the future, we're looking at a harder crackdown on virtual currency, digital assets, just because, we have to. It can't be the Wild West forever. They're looking at starting to issue 1099 DA, which stands for digital assets, for from all these decentralized exchanges and all the centralized exchanges. So if you're using Uniswap, or if you're using SushiSwap, or some other AMM, right, that generally doesn't kick out anything or ask for your information, that's going to start changing upcoming. And the IRS is going to end up having reports of all those transactions and your proceeds on that end. So it's better to start kind of getting everything ready now, make sure you're up to date on your reporting requirements, and so you're compliant. You don't want to have to wait until the IRS tells you, hey, you didn't do something correct. Just take this portion of your taxes. It's a large portion of it now, and it's something you have to keep your eyes on specifically, because the requirement for report are on the individual, right? No one else is helping us do it. They're not saying, hey, traditional finance, I'm at Raymond James and they sent me a 1099 to report all this income, interest, dividends, right? It's on us to prove that, and then to prove why our calculations are correct.
Yeah, and you're exactly right that this is becoming a big part of our taxes. Just speaking out of personal experience, it honestly takes me like 80% of my time for filing taxes to make sure my crypto tax stuff is right, which is why I think a lot of y'all watching would love this type of like done for you service that Blockchain Crypto Tax Prep offers. And speaking of which, I want to jump into some audience questions and kind of go, because I think it makes sense to talk about it here, and then we'll go back to some of my questions. I still have a lot of questions to ask personally as well. Court W asks, how much are your guys' services? I've seen others charge from $1,000 and higher.
Sure. So, like I said, we're trying to create a cost-effective model. So, for right now, our cost is $295 for your 8949 preparation, and that encompasses your first 4 wallets and 1,000 transactions. Now, after 315, that number will jump to $695, but we'll give you guys 7 days. Anybody that comes in from here, we'll give you guys an extra 7 days to get it in. And that's only if you don't want to go on extension. So,
awesome. That's great to hear. And then what happens if people have over 1,000 transactions in 4 wallets, as I think a lot of people will?
So it just goes in increments thereof. So if you have 12 wallets and 2,500 transactions, then it's just 295 times 3. And once you get into substantial numbers, we'll start cutting you discounts off that. So if you have 50 airdrop wallets, we're not going to charge you for 12 times, but we'll work with you.
That's great to hear. You hear that, folks? They have very reasonable pricing, and so you definitely should hop on a free consultation with them by using the link in my description. if you're just have questions, just curious, worth chatting with them. Okay, I will get back to some of my questions. I'll go ad hoc and cover some. Keep asking questions though, folks. This AMA is for y'all. So it is airdrop season right now. There are so many airdrops. People are farming, getting 5-6 figures even. How are those taxed?
So airdrops are taxed as other income. It's not a capital gain transaction, right? So the moment you claim, right, you have dominion control over that airdrop, right? It comes in your wallet. Whatever the price was on that day is the price you would pick up as other income on your tax return. It would go on Schedule 1. There's an other income section, and you would include it there. Then you would have that as, you still have those tokens in your wallet. So when you do end up trading them, that becomes your basis for the capital gains transactions.
Got it. That makes sense. What about other stuff? So airdrop is the biggest thing, but then we have so many other ways of getting yield or getting rewards, like staking, mining, yield farming. Can you talk a little bit about how those are similar or different than what you just said?
Yeah, so it's going to be very similar, right? We're seeing a lot of clients that are, they're mining, they're staking, right? They have these Yuri wallets, they're staking their Cardano, they're getting additional Cardano from it, right? So that's going to be picked up as other income at the price and on the date that you receive it, right? So if it's, Cardano is 50 cents and you receive that today, that would be picked up just as other income on your tax return. And you would show that, you would show all your transactions that say, hey, here are all my rewards from that. I got this X amount of Cardano, these dates, here were the prices, and here's what I'm picking up on my tax return.
What about in situations where the price on the day you get the reward or airdrop or whatever isn't that clear for whatever asset?
So it's a tricky question, right? You don't want to use just kind of the low or the high, right? If we can't figure it out, we'll go back the best we can. We'll use a bunch of tools that are tracking it and try to get an average across the board and say, look, on this time at 12 p.m. you've got this, here's what all these different sites are saying, and here's how we're going to track it, and here's the average of all those sites. We're putting our best effort. Obviously, for new coins and new tokens, sometimes obviously they're volatile and there's not a whole lot of data readily available until they start, being populated with API keys on CoinGecko or CoinMarketCap or, a host of other applications that we use.
Right. And this is something I'm sure a lot of people may wonder because it's something that has been happening more and more these days. And it's the fact that we receive a lot of like random spam tokens and spam NFTs or whatnot. And then when we go look to reconcile our taxes, that's like causing a huge pain, like all these non-important things. What do you recommend about those?
So those are marked as spam for us. And I will say that, especially on kind of the EVM chains, Etherscan and those types of scans, they're getting really good at kind of recognizing what spam tokens are so that you're not messing around with them, right? That's just out of sight, out of mind. It's already marked. You're saying, this isn't mine. I didn't buy this. I didn't receive this from somewhere else. The other aspect of that is never interact with spam tokens or spam NFT airdrops, because most likely that's someone that does not have your best interest in mind, and it probably has some wallet draining transaction associated with it. So if you don't know what it is, or you didn't specifically start the transaction or make the transaction, don't even send it anywhere else. You just let it sit there and act like it doesn't exist.
Yeah, that makes sense. Okay, I want to go to another audience question. And so we've been a little bit in the weeds of things. Let's zoom all the way out. Rika asks, just general, can you explain the process of reporting crypto transactions for tax purposes, especially for individuals with multiple exchanges and wallets? It looks like Rika needs a general overview.
So you want to get this, Brian?
Yeah. So basically, what we do in our process, which is a little bit different than everywhere else, is we don't really want to collect any KYC or personally identifiable information, so that we're trustless process. So what we do is we have you go onto any of your centralized exchanges, right? Because that's not actual real crypto. That's actually held on the assets of the books of a publicly traded company or a non-publicly traded company, but we need to go in there and we'll gather the CSV information from it. So you're going to go in, you're going to gather the CSV of all the transactions, then you're going to send us that piece. It has, we don't want your name, your social security number, any of that on there. And then we're going to take your blockchain wallets and we're going to be able to pull that from the explorers. And then what we're going to do is we're going to aggregate all of that from a transactional standpoint, and we're going to do your taxes from there. From that, we're going to create this thing that's called an 8949, which is a tax form from the US that says, here's your long-term gains, your short-term gains, and then we'll be able to identify any income as well. And then that you're able to give to your tax preparer and finish your taxes with.
Got it. That makes sense. And speaking of the different gains and whatnot, someone just asked a relevant question. What is the average percentage that they tax you on in the U.S.?
So for capital gains tax, you have two different things. So long-term tax rates, if you held an asset for more than a year prior to selling it, right? So over a full 12 months before you sold it, you get more preferential tax treatment. The tax brackets are lower. Generally, it's going to be about 15%, unless your income is over, I want to say, about 520,000, and then you move up to the 20% tax bracket for long-term capital gains. Anything that's short-term, held less than a year, right? Hey, look, markets are crazy in crypto. We're all buying and selling daily. That's going to be taxed at your ordinary income tax rate, which is, that varies based on a number of other things, what other type of wages, and your combined total income, which is going to be a lot of people is probably going to fall right around 24%. It can go all the way up to 37% depending on your income, and then your staking rewards and all your mining and everything like that. The airdrops are taxed as ordinary income tax rates as well. So that just gets added to your ordinary income and taxed at whatever rate, whatever bracket you fall into for that year.
Got it. That makes sense. And we have a lot of great questions. We'll get to all of them, I promise. So keep them coming. If you have questions, feel free to ask them in the chat. This is more a comment or a testimonial. I had these guys do my taxes. Russell, Amy was cheaper than any other service I'd researched and even gave me discounts for sharing it to my friends. Basically had everything from staking, airdrops, etc. That's great to hear. Vote of confidence from Amy.
Appreciate that.
So I want to go back to what we were talking about earlier. So for people who keep it simple and just like Coinbase, Uniswap, whatever, easy, right? Easy to grab the transactions, to connect it, integrate it, whatnot. But can you talk a little bit about the edge cases, which I think a lot of people here may have, where they use like the cutting edge thing, not really connected to stuff, or maybe something is like an exchange has terrible reporting or it goes bankrupt and you can't even get your reporting. Can you talk about how people can handle those edge cases for their taxes?
I will say with certain things, I was originally, we originally had people come that were U.S. that were on regular Binance. Binance sent out a letter saying, hey, we're not doing U.S. anymore. There's going to be specific Binance U.S. We're kicking you off as of this date. If you ever get something, a notice like that, download your transactions, get everything. You want to, the IRS isn't just going to really accept, hey, I forgot, I needed to do this. So you want to have all the reports kind of at your fingertips if you ever get a notice like that. For blockchains that aren't kind of the most well known, a new EVM chain pops up every day, right? If we don't see it in our data and we kind of see, hey, it looks like you bridged to this random chain to Kanto or something like that, we're going to need you to go onto that specific chain and download the CSVs, which you'll be able to do from those. In the rare cases, where certain things like the Celsius and everything like that, right? You got to do your best to really try and get all the information off of their systems prior to not having access anymore. It's imperative that you're on top of it. Don't let that go by the wayside.
Yeah, that makes sense. And I thought I saw a comment about Celsius earlier. Speaking of Celsius, yeah, Kalia Senrishaw writes, can you guys assist users in identifying and reporting potential fraudulent or suspicious activities related to the Celsius network accounts? I guess just speaking generally about people who had
Sure.
funds in Celsius.
Yeah, so we're actually seeing a lot of people kind of giving us a buzz for a consultation on their Celsius, on the bankruptcy and everything like that, and how to treat it for tax purposes. There's a couple of different ways that we will go through, and they depend on your tax circumstances as well. There is a safe harbor Ponzi loss if you have losses that are larger from the Ponzi scheme that you would take. But then there's also how to calculate crypto gains and losses based on what you received from the distribution from Celsius back to yourself. So we got a lot of clients that had 10 different types of assets on that exchange, but Celsius is only repaying those customers in Bitcoin and ETH, right? So they're liquidating the other assets, and you're only going to get a certain percentage of Bitcoin and ETH that's sent back to you. So there's a lot of taxable implications that go with that. There is background in the case which shows kind of what each customer had in their account on their calculations, and so we kind of have a basis of where it came from. And then we have to back into that and figure out all the taxable transactions that are triggered when you receive back the Bitcoin or ETH, which is going to be a 2024 thing because they just started sending those back in January, March. The safe harbor Ponzi, that's something. Give us a call for a consultation. We can discuss. It's something that you will want to take in 2023. It's just a different taxable situation.
Yeah, that makes sense. That definitely makes sense. Fortunately, I didn't have anything in Celsius, but I know a lot of y'all watching probably have, so that's something that you can chat with them about. Another great question from Kalia. How about filing taxes for individuals who have crypto holdings in international exchanges or jurisdictions outside the U.S.? What do we need to know about that?
So when we're talking about international exchanges, are we talking about centralized exchanges on international ones?
Yes.
Okay, so it all depends on how the centralized exchange on the international centralized exchange is reporting. Because again, remember, not all centralized exchanges are reporting. It's not actually cryptocurrency, right? So sometimes when you purchase these things, they'll just issue you a 1099 or whatever it would have been over there, based on almost exactly like it would as a stock or mutual fund trade over there. So you have to really determine what's actually crypto and what isn't.
I will add to that, exchanges like KuCoin or things like that that have kind of just kicked off you as customers, right? That who knows if somebody's using a VPN to access these things, where technically they're not supposed to with the U.S. You still have to report those, right? The IRS also, there's a whole thing where like, hey, if you received illegal income, right, we still want you to report it because otherwise it's tax evasion, that type of thing. But when we do your taxes for crypto, we still need all those CSVs, and we're going to populate them into, and aggregate all those transactions because we have to figure out the capital gains and losses, and that's a piece, right? So if you sent money to the exchange and then sent it back to a wallet, right, we can't be missing that portion of the loop to close out all your transactions for the year. So, any exchange you go to that you've done trades on, those are CSVs that we would need in order to calculate your actual total gains and losses. So we need it all, even if it's on a KuCoin or MEXC or something like that is international and not US based.
Yeah, that makes sense. So y'all's just standard offering is very affordable, probably a good fit for most people. This is just my curiosity, but do y'all have like a premium service for the people who are like have truly the toughest or like the craziest transactions or history or activities per se?
Yeah, we work with everybody. So we just like to use that 295 as a baseline, but we're going to give you a price before we get working after you send us all of your crazy stuff. I think we just finished one this week that had, I think, over 900 wallets. We did one that had over 100,000 transactions. We've done stuff dating back 10 years. So anything and everything we'll take care of for you.
That's good to hear, because I know like I see really two types of people who would really want the service: beginners who are just like kind of clueless and just need help, and also the really rich trading degens per se, who are just like slinging like 5, 6, 7 figures, and they're like, I don't have time to worry about this stuff. Let me just pay someone like a big chunk of my money, but to them, to their volume and to their profits, it's very little, just to figure it all out for them.
Yeah, say it's $5,000 to get your tax stuff done, but when I went to go do my first taxes myself, it took me 24 labor hours to get done, right? So how much time could you make? How much money could you make in a bull market in crypto versus costing $5,000 for one of the more complicated situations?
Yeah, and just speaking from my own personal experience, like after I got in crypto around 2017, 2018, and my first tax season was such a pain that I spent probably like 40 plus hours trying to reconcile everything. Got close enough, like it was a little bit off, but I was like, okay, I spent like 5 more hours, can't figure this out. It's like $1,000 difference, whatever. But then in the future, I was like, oh, people are like, oh, do this on this chain, do this crazy thing. I'm like, well, I'll have to reconcile it later. So no, I'm not going to because of that. So I learned the hard way from that. Okay, some more audience questions. Keep them flowing in, folks. We will answer them all for you today. And I have some more questions as well, but I have a question from Donna Mary. Held SHIB on Robinhood for over a year, sold it, and then bought SHIB on Coinbase. How would that work for taxes?
Okay, so I think if you held it on Robinhood and sold it on Robinhood, right, it depends on where you purchased. So, okay, she bought the SHIB on Coinbase, so then she transferred it to Robinhood and sold it after a year, right? So that's kind of how I take into this situation. So when you're reporting that on your own, which you're going to have to, because of Robinhood, they're only going to have what you sold, because if you purchased on Coinbase, they don't know your cost basis. So how we would report that is, those two exchanges, we aggregate it. We see that you purchased that SHIB on Coinbase on X date. We have your cost basis there. We have it that you sold it on Robinhood on X date. We have your proceeds here, right? Your total gain is, your proceeds less your cost basis. And then you have to show the 2 dates, right? You have to do those, because if it's long term, you're going to have preferential tax treatment and pay lower capital gains tax rates on. And so you would want to make sure you have those 2 dates in there to calculate it, that it's a long-term capital gain. So you're going to need to take both of those exchanges, essentially combine them into one, put that on 8949, and use that to report so that they can kind of match up, your Robinhood proceeds are from those costs where you bought it on Coinbase.
Got it. Thanks for the explanation. More great questions flowing in. Let's take one from Nala. This seems kind of complicated, but is there a way to get exempted from long-term capital gains by investing into real estate or something?
So I think that's kind of along with what is a 1031 exchange, right, where you're kind of kicking the capital gains down the street. Unfortunately, that only applies to a real estate transaction these days, right? So you can't take gains from, crypto, right, or any traditional finance. Say, hey, I'm going to purchase, something in real estate so that I can not pay capital gains on that. It's just a 1031 exchange is specifically these days real estate to real estate transaction.
Got it. That makes sense. So Nala, unfortunately, you can't do that. Sorry. Okay, let's take some. Actually, I want to ask another question I had in mind before we jump to the rest of these great questions, and that is something called tax loss harvesting. We always hear that that's like really a good strategy to do. Can you tell us a little bit more about that and why we should do that?
Sure. So in your wallet, which most people still have, you still hold something that has lost a significant amount of value, whether it's an NFT or some, junk coin that you purchased and is gone. Well, when it's still sitting in your wallet, then you don't get to write off that capital loss that occurred from you losing money. So what you really want to do is, if you're truly done with that project and you think it's dead and you owe capital gains on the other side, what you can do is you can sell that token now, or NFT or whatever it is. You need to receive something in exchange for it in order to be considered a capital loss, to realize that capital loss. So if there's no exchange for it, because there's no liquidity in any of it, we've created a simple way where you can transfer it to one of our wallets, pay a little bit of whatever the native token is, and then we'll send you back $1. And then we'll mark that as the a realized loss there, and then you'll be able to put that on your taxes appropriately.
Awesome. And what's the so that's a really clutch service. Thank you for that. And everyone should consider doing that with them if you have something that you can't really exchange easily. But what's the what can you do with those losses? Like, why is that useful for us?
So you can use losses like that to offset gains in the same year, right? And so, if you have $10,000 worth of gains this year and you have this token that's at an $8,000 loss, you sell that for the $8,000 loss. Now you've offset 8,000 of those gains. You're only paying tax on $2,000 of those gains. The other situation is if your losses exceed, your gains for the year, right? You can roll over any losses that you have remaining, and only pick up $3,000 worth of loss in the current year tax year. So if you have $100,000 worth of loss and that's it, you pick up $3,000 in this current year. That's the max. And then you would roll over $97,000 to the next year. And you want to do that. That's why we always tell our clients, go back to these last 2 years where, everybody was kind of taking a beating, 22, 21, and make sure you have your taxes so you can pick up those losses and roll them forward to utilize them against gains during markets like this.
And let's say you have 97,000 rolled over, and then you have 80,000 in gains for the following year. Does that 80,000 get canceled?
Yep. So that 97,000, it reduces the $80,000 worth of gains to zero. You do get to take it up to $3,000 of a capital loss, right? So then you'd be less. So you'd be left with 17,000 after the 80,000. You pick up 3,000 of a capital loss on your current year return, and you'd roll over that 14,000 to the next year. So you wouldn't be paying any capital gains tax.
Amazing, folks. And this is why it's so important to do this during bear market years, like Mike was just saying, because personally, to speak in my own situation, obviously I had locked in profits for 2023, especially with the bull run starting hot in the end of the year. So I would have to pay a lot of taxes if it wasn't for me locking in losses in 2022, which, like he said, was a brutal year. And so yeah, I did fortunately lock in quite a bit, so that can be used to lessen the blow of what I owe in 2023.
So a lot of our clients that we're seeing now didn't actually file in 2021 and 2022, and we're able to go back, look at them, and then figure out, is it worth it for you to go back and amend your taxes to pick up those losses to roll forward. So all hope is not lost if you did not do that.
Oh, that is great to hear. See, this is why y'all should work with Mike and Brian, because of this, helping you do things like amend and figure that out. Okay, let's get to some more audience questions. If y'all have questions, feel free to write it in, but just stay on topic. Okay, this is a multi-part question. Let's see. If you sell but can't prove where, how, and when you bought and how much you bought, like let's say you bought but no KYC exchange, but you know when and how much, do they take your word for it if they audit you?
They're going to require some sort of proof, right? You have to have a transaction hash or, the ability to have, from a CSV or an exchange transaction that says, hey, I bought this, right? Because there are, you could have received that from a buddy, right? Who's saying, hey, here's an ETH, get you in the game, right? And then you sold that. You didn't really buy it, right? So the IRS just doesn't take anybody's word for it, unfortunately. They're looking to, say, hey, the burden of proof is on the taxpayer. If you can't provide that, it's kind of a sorry, you're out of luck situation. So you would end up just paying tax on, if you can't prove how much you bought it for, where you bought it for, or where you got it from, then you would end up just paying tax on that sale for the entire amount of proceeds.
Got it. And I think this is a little bit similar to this question, the question that just came in. Green Light asks, how do you get CSV files if the exchange no longer gives you access?
So we've had pretty good success in this current tax year. If you send them an email and you say, hey, I just really need this, a lot of them are actually giving them to you. Surprising.
That's good to hear.
So on that same note, if you are on any centralized exchange right now, if you get anything out of this video, just go and download a CSV file of all transactions, all time right now. Throw it on your desktop. It doesn't take up any space. It doesn't cost any money. So that in the event any of these centralized exchanges ever go down for any reason, you're not going to deal with that issue.
Got it.
I think that's just a good process for anybody doing, investing in cryptocurrency is, like I said, the proof is on the individual to provide these documents and the transaction data with their tax returns. And so just make it so, hey, look, every month or every quarter you go down and you get your records, right? You just update them. You want to have those at your disposal. And, if you're going to kind of be, making trades and, investing in crypto, it just makes sense to keep your records up to date because no one's going to do it for you. And like you said, we've watched so many exchanges go bust, right? You never know what's going to happen. Everything can be great one day, and then all of a sudden, we're watching Luna go down, and SBF is going to jail, and it's just, it's still crazy. It's still on you to, get that data. Just make it part of your process, right? When you're doing a trade, say, hey, it's the end of the month. Let me go get my data from these exchanges.
And the follow-up question is, if they don't email it to you, then what?
Then our best solution is for you to go back through all of your notes and let's try and recreate what we can recreate, and just do the best that you possibly can. There's not much else you can do.
And that would be a note that we have, hey, this is information provided by our client, right? So in the case of an audit, that's probably, it might not hold up. If you can show them, hey, I made a deposit into here, I bought this, and you can see this is where it came out over here. If we can start making, if we can make informed decisions like that on where all the funds kind of went, then you have a case. But if it's just like, hey, this is what I say, and the IRS is saying, well, that might not be acceptable, right? It's a case by case basis. So just try to email them, do your best, right, and get all the records you can.
Yeah, and I think what you were saying earlier is that if you don't have perfect records and need to recreate some stuff manually with a little bit of guesswork, then you basically have to take the most conservative approach, right? Pay the entire cost basis like you got it anew, even if that may not have been the case.
Always go the most conservative route.
Yep.
Okay, let's see. A lot more questions coming in. I think this is kind of similar to what you just answered, but part 2, if you bought something years ago and are selling now, if you can't prove when you bought it, do they just tax you long-term or short-term cap gain tax?
It's it's going to default to short term, right? Because if you don't have a date that you throw in there and say, hey, I bought this, in 2022 and I didn't sell it until 2024, it's going to default to short term just because there's an unknown date in the beginning, right? They just assume it's short term because most of crypto actually is short term. If you have a bank statement, right? These are going back through records and you say, look, here's my deposit. I deposited into Cryptopia in 2019. I bought this Bitcoin right before they went offline. I transferred it to this wall. You can kind of say, all right, well, that's $10,000 worth of Bitcoin that went to Cryptopia Holdings on your bank account and then to this wallet, right? We would use that in our data and put that in our documents to kind of prove where the flow of funds went. And that's the best effort you can make on those. Now, if you're just saying you can't do anything about it, again, you're going to end up, I would default to short term just because the IRS is going to say we can't prove when you purchased this or when you got it, or what the cost basis is. You're just going to have to take the hit on this asset.
Thank you. So to recap, to answer your question, defaults to short term as that's a higher tax rate, more conservative per se. And this is more a note than a question, but someone just shared his experience. If you can't prove a buy price is it's taxed as all profit. I lived through this. 120K taxes on a year. I lost money because I couldn't prove when the issue came up 4 years later. So prepare.
Yep.
So remember to prepare.
Sorry you had to go through all that situation, but it's tough things to live through.
And folks, this is why I don't do as much degen stuff as I would like because of how complicated it's going to be later.
Well, let me explain real quick. So if it's on a blockchain, right? So if it's on the Ethereum chain, if it's on any of the actual blockchains, there's a ledger that goes back forever. So we never have this problem. It's when you're on centralized exchanges and you can't get the information from the centralized exchanges is when this all goes away. So make sure that anytime you're on a centralized exchange, download that CSV file of all transactions all the time.
Yeah, that's a great thing. But unfortunately, some central exchanges, their API sucks too. Yeah. Or they don't give you all the data you need. So it's like, oh my goodness, like why?
We deal with that quite a bit in our processes, and that's why we prefer the CSVs, right? Because we'd rather read kind of what the transactions look like. Because when you pull over some API keys and the transactions coming all funky and missing a bunch of things into whatever software you're using, you do need to figure out, what is going on. How do I need to manipulate this to show the transaction properly?
For sure.
And remember, when you only use an API key, if you used, any of the softwares to do it, those transactions are going to be gone if that software goes away. So always get a CSV file as backup, no matter what.
Very, very clutch tips. Thank you. Let's go to another question. Dennis asks, in the event of a dispute with IRS regarding crypto tax filings prepared with blockchain crypto tax prep, what level of support and representation do you guys provide in assisting the user to resolve the issue?
Like we said, and kind of when we're preparing everything, we have all the data at our hands, right? So when we produce the 8949, it's coming from all the CSVs that we've aggregated and parsed, all the EVM chains. So whatever specific transactions or items that they're looking into, we're going to say, hey, look, here are our backup documents. These are provided by the exchanges, provided by the blockchains and everything like that. And here's where the calculations came from. That's why we always get the CSVs and everything in our files, just so that in this type of case, right, you get a letter and you're like, they're asking, this when I sold this Ethereum, where this cost basis came from, right? And we're able to kind of say, here's where our calculations prove that this is correct. And that's it's the best you can do. It's just to have all the data at your fingertips, and that's why we require it when we're doing it, so that we can we're not just assuming something. We can see what happened on
Right.
these CSVs and in these exchanges.
That makes sense. And a great quick follow-up question that from Greenlight. I think you meant to write, if you reach out to Blockchain Crypto Tax Prep for help, how long will it take to get started?
So it really only takes about, we'll do a 15-minute consultation. We'll learn a little bit about your story, and that doesn't cost anything. And then when you send us your CSV files, it really just depends on how many people are in the queue at that point in time. But right now, we're only running about 7 to 10 days, depending on the certain type of file. So you can use that as a gauge. But as we get closer to 415, who knows?
So people, it's a little over a month. Stop procrastinating. Reach out to them for help. Sign up today so you can get things done without filing extension or worrying about other stuff. Another great question. So we talked about blockchains and centralized exchanges. This is a little bit different. Kalia asks, can you ensure accurate reporting for non-custodial wallets and self-custody solutions? There are a ton of different wallets these days.
We
prefer
kind of prefer clients self-custody their assets. I think it's been proven over the last year, right? If you leave it on an exchange, you kind of leave yourself open to having those assets taken from you in, some bankruptcy event or something like that. So any self-custody wallet, if you have ledgers, if you have MetaMask, if you have Ravi wallet, if you have Phantom, right? There's all of these things. We're going to collect all of that data. We're going to run it through our systems, make sure we can pull off every chain that you're on. If it looks like you're missing something, right, we're going to go through and say, look, we've kind of identified a wallet you've interacted with a bunch of times. Is this yours, right? We got to tie out all the loose ends, and that's what, that's how you get accurate reporting. So it's all the centralized exchanges, all your self-custody wallets, everything you've done, that is your data for the year that you need to provide.
Yeah, that makes a lot of sense. Thank you for that. Some more great questions I want to ask. Healthy habits. If I fail to file 2023 taxes, can I file 2023 and 2024 next year in 2025? If not, how can you help this situation, please?
You can still file 2023 taxes right now. You have until 4/15, and then with a valid extension, you have until 10/15, which is an extension of time to file, not time to pay. So your payments are due 4/15. So they might, if you have gains and things like that, you might have additional interest. Now you can go back up to 3 years to amend returns. So if you don't file it this year, I would highly suggest you file it with your next year return before you get out of that look back window of 3 years, because if you had losses 3 years ago, you didn't file that, and now you can't report it, you're kind of out of luck for that year. So
yeah, that makes sense. So yeah, healthy habits. The takeaway is to just file it.
Yeah. You can file multiple years at once. We're coming across it daily with people that are just starting to get their compliant with crypto tax. It's a good thing to do.
We have some great questions coming in, ones that I haven't thought of before too. God Valley asks, how about a dual citizen?
Yeah, so that's pretty simple. We're gonna provide all the documentation that your tax preparer is going to need from the crypto standpoint. So your tax preparer can utilize pretty much that exact same information for wherever you have to file your taxes. Might just be on a different form. Yeah.
So yeah, they help with the general calculations and stuff, and then you can do that as you need for whichever country or countries that you need to. A great question. I'm jumping ahead a little bit. Don't worry, I'll get to Ralph's and Jake's questions. Those are great questions as well. But I want to go to this one first. An exchange called BitForex may have rug pulled I don't know the status of the police investigation, but I don't have access to my funds on there. At what point can you use lost funds for tax loss harvesting?
So this is a tricky situation because if you don't have access to those, that's just it's considered stolen, right? And there is no deduction under the current U.S. tax code for theft loss, right? And so that would just, what he's describing to me is what I would consider most likely a theft loss. And unfortunately, you're just kind of out of luck. You have to have access to it to be able to kind of sell it or, exchange it for a market that we would help create. Otherwise, they're just going to say, hey, you just lost access to it. It's a stolen or lost crypto. There is no deduction for it. It's kind of the same thing if you were to send ETH to a wallet that you thought was your own, but you sent it to someone else on accident. You keyed in, the incorrect address, right? You don't get to take a deduction for it because it's not an actual transaction that they would consider a trade. In terms of crypto, you would just kind of write that off as stolen or lost currency, and since there is no deduction right now, you're out of luck for that one.
Yeah, think about it like either you got pickpocketed, you don't write off your, the cash that was in your wallet when you got pickpocketed, or if you, in that second situation, if you just dropped $20 on the ground while you're walking down the street.
Yep.
Got it. That makes sense. Okay, I promise I'll get to these questions. Ralph and Jake, stick around. But I want to go to this one first. Jordan says, I'm not too tech savvy. How can blockchain crypto tax firm help me with my crypto taxes in a simple way?
So we can jump on a Google Meet with you. You can share your screen with us and we can walk you through the process that says, okay, click here on Coinbase, export all CSV, all transaction, bump it out to us and, attach it to this email and send it to us. It's very simple. We deal with people that are not tech savvy all day long. That's, I'd probably say that's at least 30% of our clientele. So we're here to help you.
We're going to guide you through the whole process. It's kind of handhold and help you figure it out. That's what our service entails.
Yeah, so if you're not too tech savvy, Jordan, then a done for you service like blockchain crypto tax prep actually makes a lot of sense in my mind. As you probably would struggle with some of the tools and figuring out what all the different categorizations mean. Anyhow, let's go back to some of the questions. Great questions from above that I skipped temporarily. Ralph asks, in a pre-sale or like an ICO, I guess back in the day, you transfer your funds to a wallet address. It's not a direct or instant coin swap as the token generation event has not occurred yet. Does the time frame start when I sent funds or when I received the tokens?
So it's a tricky situation. And, you're kind of sending ETH to a wallet and you're receiving in a different transaction, 3 months later.
Yeah.
Right? That event, I would consider the transaction to be initiated when you sent the initial ETH or Bitcoin or whatever you did, whatever they were asking for, USDT for that token generation event. Mm-hmm. And then when you got it back, you would have to tag those two transactions, right? So you'd say, okay, here's when I sent the money, here's what I received. That's the cost basis for this on this date, right? So now you have to, because you have a lot of things to kind of pick up in that one, and then you want to tag that, and then you'd say, all right, so now I have it for 3 months. I need to hold it for another 9 months to get, more preferential tax treatment of long-term capital gains.
Yeah, that makes sense. That is something I had to struggle with before too, back in the ICO days. Thankfully, haven't had to do that stuff in a bit. Another question is, can you talk a little bit about vested tokens? I guess like, let's say you do the token generation or you do the ICO or pre-sale and you get like, let's say 10,000 tokens, but you get them in chunks every month. Can you talk about like
I think
timing and things like that?
Whatever you put in to that pre-sale is your cost basis. When you're getting those tokens back in exchange, you would have to know the total amount of tokens you're eventually going to get, right? And then you're going to have, I guess, multiple No, they're all going to be the same date of when you first got them. So if you send in ETH, right, you say, hey, you get 10% of your tokens each month, and you got 10,000 X tokens back, right? So you'd have, whenever you got them back, whenever you set that ETH into your cost basis, the start date, and you would use your total amount. So if you wanted to sell those 10,000 tokens immediately, you would have to take your cost basis of what you sent and the percentage that you're selling of that, right? You'd say I sent ETH and I got 10,000 tokens, which is 10%. What's 10% of my cost basis to attribute to these tokens? Those are scenarios that you definitely need to have good records on so that we can tag it in our system, because initially it's not gonna show as a one-to-one swap just on an exchange. Those are different scenarios where it requires a lot more kind of user client communication to let us know what's going on.
That makes sense. Another great question. Jake Breeding asks, ETH gas prices are really high right now. Really high right now. Do you deduct them from the sale price of a swap? Also, transaction fee paid to acquire tokens are taken off cost basis?
So the transaction fees get added into the cost basis when you're swapping. So if you're swapping ETH for Pepe, right, and you paid $100 of transaction fees in that swap, that would get added to your cost basis of the Pepe in the calculations. So your cost basis would increase a little bit so that you would get to offset, gains that you would have, or increase the losses down the line.
That's good to hear. That's good to hear. Let's see. Okay, I think you kind of answered this earlier, but maybe just a real quick recap. The Real PG writes, when FTX went down, all my info disappeared, like I never made a transaction or had any bank link, nothing. Is there a way to write off what I lost?
So FTX appears to be seemingly going the way that they think they're going to be able to reimburse customer lost funds at the date and time, right? Which means you're not going to get back the same amount of Bitcoin or ETH or whatever you had on there. They haven't declared it a Ponzi or anything, so you can't take a safe harbor Ponzi loss on that. What you would end up doing is, whatever the cost basis of the transactions on the date you put them into FTX, right? So all the tokens that you put in FTX, you get that cost basis from where they came from. And whatever you receive and when they do the liquidation and kind of the settlements, you would end up figuring out your taxable, your loss on that transaction. So when you get anything back from FTX, that's when you're going to figure out your taxable transactions. And then when you sell the things that you got back, you'll have additional gains or losses, most likely losses on those. So you can't just write up a loss. You're just going to have to figure out the cost basis going into it, what you receive on the other end once everything clears, and you'll figure out your taxable transactions for that year.
That makes sense. Thank you. And Jordan has, maybe you don't want to go too deep into this as they take forever, but Jordan, it definitely seems like you should hop on a free consultation call with Blockchain Crypto Tax Prep. They can help you with all these basic questions, but they're asking, can you provide examples of transactions that'd be considered taxable?
Let's make it fairly simple, right? So unless you purchased and held it, or purchased it and transferred it to one of your own wallets, almost every single thing else is considered a taxable transaction.
That's a great way to put it. So you don't have to list off things for days. You hear that, Jordan? Almost everything besides buy and hold and transfer it to yourself, it's considered taxable event. So thank you. We are getting into about the hour we had. We had a lot of great questions today, and I'm sure other people watching this. Sorry about that. I don't know why I had the alarm. A lot of people watching it will want to work with you guys. Can you just share a little bit more about what people need to know about your service? Just like final thoughts about what y'all can do, who you can help.
Yeah, no, we really appreciate your time on here, and thank you everyone for jumping in here. So look, we want to help as many people as possible What we don't do is file your regular taxes because there's so many people that do that part. We're only going to be handling your crypto piece. We can handle the most complicated part. We can handle the simplest part. The easiest way to get in touch with us is through that link right there. You can jump on and go to our site. There's a calendar. Just pop on a calendar invite. You get 15 minutes free. We'll have a conversation. And if for some reason you don't want to do that, you can just email us directly. The information, just click straight through that link. You can just email us your CSV files and your public wallet addresses, and we'll be able to reach back out to you and communicate through email in order to get you set up as a client. Everybody knows our pricing. It's $295 for 4 wallets and 1,000 transactions.
All right. Thank you so much, folks. You heard Brian. Go sign up using my link in the description, and I'll pin the comment after the stream. Free 15-minute, or if you are camera shy for whatever reason, then you can email them as well. They're here to help. This is the done for you service. It's very rare in the crypto space. There's probably dozens of tax tools, but those you have to figure out yourself. And like Brian just said, they are focused on the crypto component. So they'll help you get this right, and then the rest of your taxes you do with your own accountant or TurboTax, whatever. All right. Thanks, everyone.
Thank you so much. Appreciate it.
Thank you, everybody, for your questions. We look forward to you guys setting up appointments.
Great.